Well, the top 5 stocks to watch out for in today's trading session. We'll begin with earnings from SAIL, which managed to clock in a healthy set of numbers. The revenues from operations came in at 16,171 crore rupees this time around. You also had the net profit jumping multifold to 2,647 crore rupees, and that was largely on the back of reduced expenses. The EBITDA came in at 6,453 crore rupees, with margins jumping to 40% versus 12%. There was an exceptional loss of 771 crore rupees versus an exceptional loss of about 54.6 crores on a yearly basis. Meantime, IRCTC as well, the Indian Railway Catering and Tourism Corporation, reported a 79% jump in the net profit, but it did take a hit with the lockdown that was imposed. The net profit, in fact, came in at 150 crore rupees versus 84 crores on a year-on-year basis. You did see the net revenues, which increased to 18% to 587 crores versus 498 crore rupees. The catering revenue decreased about 12%. Revenues from the sales of their bottled water, which is Rail Neer, took a dip of about 13% to 51 crores, and their internet ticketing revenues as well saw a dip naturally due to the lockdown by about 15% to 194 crores. But the revenue from tourism, that increased about 7% to 102 crore rupees. Meantime, D-Mart or Avenue Supermarts as well delivered its numbers, and it did take a major hit due to the coronavirus lockdown. With margins dwindling to 2.8% versus 10%, the revenue from operations were down 34% on year. Profits came in at 49 crores versus 335 crores. That's down a whopping 85%. The management did say that the lockdown has had a significant impact on the performance. There has been an impact on their footfalls as well as sales due to the lockdown. Though the business model has helped them to face the pandemic with relatively less impact, the outlook going forward does remain uncertain and store operations remain inconsistent. Apart from D-Mart, you have Lakshmi Vilas Bank that came out with its numbers with a profit this time, so a healthy earnings at 92.9 crores versus a loss of 265 crores. Their NII growth, though, slowed down to about 68 crores versus 140 crores. Provisions were a little bit lower, 305 crore rupees versus 314 on a sequential basis. And you had the asset quality, which deteriorated, albeit marginally, to 25.3 crores versus 23.7%, on a sequential basis. And Info Edge is in focus too, as Morgan Stanley has its report out. They maintain an equal weight rating on the stock with the target price at 26.10, saying that Zomato has released their multi-annual report for FY20. The cash burn was marginally better than what they expected. They're bullish on the potential of food delivery as a concept in India and believe that the stock of Info Edge is pricing in the near-term accretion from Zomato.